the reason I want to look at a global market is this. The FTSE 100, the 100 largest UK companies, an index that measures that, is still at the same level it was in 1999.
True.
When I wrote in my very first Financial Times column, I'm moving my pension to a global basket of stocks, including predominantly US.
Yes.
So I've been saying this for 21 years, and, people haven't listened, but they will after this show. I'm going to start the revolution.
You've done
and 25 is, if any stock you pick drops 25% from the highest it's been. So let's say it doubles and it drops 25% within those 12 months, you sell it. If it doesn't, you're still holding it to the end of the 12 months. Simple. And keeping it simple is key.
Okay. So continue with the 3 tips for a complete trading novice. So we talk about investments. You talk about 12, 15, and 25. What's the difference between 15 and 25 again?
So 15 is the number of stocks. 25% is if any one of them drops 25% from the highest it's been since you bought it.
Okay.
And there's amazing websites like Yahoo Finance is free. It'll give you any information about the stocks. The third, final thing, if I may say so, would be pick those companies not on news. Don't gamble on the news or the fad or whatever. You want to make sure, and this is where education comes in, I'm afraid, is you want to make sure they're well valued. How do you do that? Well, I teach that, but for free as part of my campaign. Revenue growth, sales growth, strong cash flow. Everybody can understand that. Your audience is going to be Indian. They're probably all business people. They all understand cash flow.
Yes, they do.
Okay. Dividend paying, because research shows dividend paying companies tend to do better than none. So we want to make sure they've got all of these boxes ticked, plus a few others ticked. And the reason for that is it'll give us resilient companies which, if the market falls, won't fall as far. And if the market rises, will rise more. And it's that kind of formula which gives me actually sometimes boring companies like PayPal does incredibly well on the upside. If the market falls, yes, of course it falls. Even Microsoft falls when the market falls. So be aware of risk of investing. But PayPal's in my pension because it's resilient. It fell when the market fell, but it rebounded quicker. And that's stock market risk and reward. Everything falls when the markets are down. Yes, there's a risk, but we want the companies which don't fall as far and rebound more.